It's one of the world's largest trading blocs in the world, with over 1 billion potential consumers, the second largest landmass, with 60% of the world's uncultivated arable land. In the near future, 1/4 of the world's workforce will live there. Africa may be 50-plus countries, but it is fast organizing itself into one market, and a market to reckon with. Hello, I'm Carol Pineau. Welcome to our show, Africa USA Now, current events at the intersection of Africa and the United States. We're coming to you from the Embassy of Nigeria, which is a perfect place for the discussion today. Nigeria is Africa's largest economy, and the topic for our show today is all about money, particularly trade and investment. Why now? Because the trade and investment landscape in Africa is dramatically shifting. Since African countries first gained independence, there has been a dream of a united African trading bloc. The recently signed Continental Free Trade Agreement makes that a reality. The numbers are staggering. A market of more than 1 billion potential consumers, twice as big as the European Union, and with more middle-class consumers than the entire population of the United States. While a market that size is certainly appealing to international businesses looking to expand, the real power is inside Africa. The agreement pushes governments to remove tariffs and other barriers and strives to create the free movement of investment and people. This is Africa unbound. Added to the mix, the U.S. Congress just passed the BUILD Act, the Better Utilization of Investments Leading to Development Act. This doubles the amount of government funds available to back U.S. investment in Africa. Here to unpack all of this today are my amazing guests. We have with us Wale Adeyusun, who is the Chief Investment Officer and founder of Karuma Capital Management, Steve Cashin, CEO and founder of the Pan-Africa Capital Group, and Worker Gashu, the Director for Africa at OPIC, the Overseas Private Investment Corporation. Welcome. Thank you so much for being with us today. With the BUILD Act now and the Continental Free Trade Agreement, the push for intra-African trade. Steve, you've been in Africa for decades. You were born in Africa, actually. Talk to us about how it has changed your investment approach.
We've invested in difficult markets. We've invested in some more middle market countries. But what we see now is an opportunity across the continent where industries are converging, where countries are converging, and where the entrepreneur across Africa recognizes the scale of what they are able to do. And I think it's very exciting that here in the U.S., we are raising the bar in terms of the scale, in terms of what the U.S. can do in terms of supporting that. Many people talk about the SMEs in Africa. I don't want to forget the large companies in Africa. The U.S. large corporate market is absent from Africa. We need to bring them back. And it doesn't take just the corporate, it takes the U.S. governance as well. We want to ensure that along with the support of BUILD and other similar initiatives, that the regulatory environment in the U.S. evolves to encourage U.S. investors across Africa to partner with some incredible opportunities across the continent that can drive wealth for everyone.
Well, you are in, I think, you have 100 businesses spread across 20 countries. The Continental Free Trade Agreement must be having a big impact on that and intra-African trade.
I think the Free Trade Act, actually also along with the BUILD Act, are all encouraging signs for additional activity on the continent. It's the sense that there will be a lot more capital that will flow through the BUILD Act. The idea behind Karuma Capital was to bring commercial capital to the continent. And we've been very successful that we've raised over $500 million from primarily U.S. endowments, foundations, and pensions to invest on the continent. Karuma Capital couldn't really approach OPIC because all they did was debt before. And our documents didn't allow us to really use debt, but now we can approach them for equity.
Are we going to have some deals here?
Absolutely.
Okay, you're on the spot. Talk to us about sort of broad brushstrokes, what the BUILD Act is going to do.
So the BUILD Act is one of the most landmark pieces of legislation in the past 40 years. It essentially revitalizes how the U.S. government approaches development finance. Currently, our maximum contingent liability at OPEC, meaning the maximum amount of money we can lend, is capped at $29 billion. With the reforms made through the BUILD Act, we are now able to invest up to $60 billion. Included in the bill is our ability to provide equity products. Currently, OPEC can provide debt financing, it can provide political risk insurance, and we can fund funds. So being able to provide equity investments gives us an important fourth stool in our products to our clients. One of the things that we wanted to look at with the reform measure was ways to address development. And so two big pieces of the reform measure are a focus on low income and lower to middle income countries. So we'll see hopefully increased deal flow going to the continent.
We want to thank the U.S. government for the BUILD Act, and now we need to encourage them to expand Exim Bank too.
It's never enough. Imagine the second largest landmass in the world, then chop it up into 50-plus countries, some of them with populations of around 1 million or less. Add customs at every border, restrictive visas, high tariffs, conflicting laws, and much more. It becomes apparent why it's so hard for many African countries to compete economically. But then wipe all that away, and suddenly you've freed up the movement of people, goods, financing, and more. Today, the buzzword is intra-African trade. African businesses used to strive to expand to Europe or the U.S. Now, with a potential market of over 1 billion people, why look any further than your own backyard? So, Wally, you have so many consumer businesses that you invest in. I'm wondering about how they are looking at this, the lowering of tariffs and being able to move people and goods. How is it impacting the businesses you invest in?
Sure, it's actually very encouraging for the businesses we invest in. I mean, examples are biscuit manufacturer that we have in Ethiopia, and the idea that they can move across the border and really sell stuff now, it's very encouraging, not having to worry about tariffs. We have a cables manufacturing company out of Kenya that can really move across the border to Uganda and keep on going all the way to Rwanda and really selling goods there without having to worry about really additional expenses of moving those goods across. So those are encouraging signs for the consumer that we see. Obviously, it has the potential of lowering the cost to the consumer. It can increase the volume, and for all of us, we can benefit from being able to sell a whole lot more and at least generate enough returns and revenues for our clients.
Steve, you are in banking, and banking is another one of these things that the Continental Free Trade Agreement should change a lot, the free flow of finance. How is that changing the banks that you invest in?
So I think it provides a huge opportunity in the financial services industry. I would broaden it to not only banks, but to insurance, to pension funds, and to other services that support businesses, where we're able to look at opportunities on a more regionalized basis and use more tools to be able to support these businesses. As these barriers break down, we also need the legal and regulatory environments to improve to support these opportunities. And that's really what we need to focus on today, because if we can get the barriers down and the legal and regulatory environments to support investors and support regionalized products, we have a huge opportunity ahead of us.
Now, Worker, you spent a lot of time talking to governments in your position now, and before that, you were at a major law firm where you also were doing a lot of deals. What are you hearing as far as the, sort of the genuine desire to really lower these tariffs, to really lower these barriers?
Interestingly, just looking at historical trends, even at OPEC, right? 10, 15 years ago, 70% of our products that we provide to clients was political risk insurance. Now we've seen a flip where a majority of it is debt financing and fund of funds. And I think that is an indication of how we've seen the political risk throughout the continent actually decrease. But what we're seeing is regulatory risk increasing. So getting a better sense of the regulatory market, understanding what regs on the books are going to be enforced, and which ones are not, and providing some certainty around that is key to help economic growth.
If I can also jump in on this, because it's not only the free trade opening up, it's by opening up, many of the markets in Africa become more part of the global markets. And so these openings provide many other opportunities, not just the trade, but the exposure to a global investor crowd.
Wally, do you find the same thing?
I think the beauty of the continent is that fact that a huge chunk of business activity is still informal. I suspect if you go to the border of Nigeria between Lagos and Benin Republic, the semi-border, you see people moving back and forth every day, right? How do you measure that kind of trade? You know, the guy that trades comes to Lagos, buys goods, goes back to go sell in Kinshasa. How do you capture that? So I think there's a whole lot of intra-Africa trade that actually we're not capturing. I think the formal numbers are fine, but there's a whole lot more, and it's still encouraging though that the free trade will do more for activity overall.
But in a sense, that's really what happened with the cell phones, that they came in and then all this money started coming up and they realized there was so much more.
It's exactly a classic case of where, you know, the quote $1 a day, I guess now we've moved up to $2 a day. And really people don't really have a good sense of what the disposable income on the continent is. And we didn't think the mobile phones will penetrate as much as they've done. Now we're getting close to 1 billion mobile phones. In Nigeria alone, it's over 150 million.
More phones than people, I understand.
Getting close to that. A lot of the metrics we use in the West when it comes to Africa generally don't work, and we really need to temper them and need to take the informal market into consideration.
You know, you have gone way beyond your own country, in 20 different countries. How do you encourage people to understand if I am Ugandan, it's not just about investing in Uganda, and if I'm Tanzania, it's not just about Tanzania? How do you get people to have that kind of mindset?
That's a good question. You know, we started off with a focus on sub-Saharan Africa. I think for us, because our perspective was more of a commercial approach initially, which it actually still is, which is to generate really attractive risk-adjusted returns, right? So for us, no country was a no-go for us, right? I think the trick for us into doing that is to make sure we find local partners that can help us navigate the landscape. But for us, because of the commercial perspective, and I think if most people start thinking about that in terms of commercial returns and risk adjusted, I think they'll find that a lot of countries are attractive and a lot of countries are leaders in different sectors that you can really go ahead and take advantage of.
If the buzz is all about Africa doing business with Africa, where do American companies fit in? Smart U.S. companies are partnering with African entities, increasing their footprint on the continent while growing businesses and jobs in Africa. But American investment in Africa has always lagged behind. Meanwhile, there is often concern for China's growing influence. Certainly, Chinese investment has brought a lot of money to the table. Yet if the push for intra-African trade really took off, it could be even more transformative. Maybe it's time the U.S. stopped fretting about China and instead look to partner up and get in now. So Steve, you talked about we need to get the big boys back in here. What do we do to get American companies back in?
So I think we actually have to thank Wale because he's begun his efforts in terms of bringing the U.S. pensions into Africa have been successful in a way that many others have not. The other thing is, Africa has a huge consumer society. The middle class is growing enormously. We have a company based in South Africa, a company called Navarre, that invests in shopping malls across Africa. They're doing this in partnership with Walmart. What's really interesting is the partnership between pension money, retail growth, and the middle class has resulted in a triggering of a changing in urban infrastructure, creating a safer environment for shopping, while also driving changes in the whole supply chain management. It's all connected. And the minute you have people like Wale who can give the U.S. pension the confidence that they need to go into Africa, to introduce them to the African pensions, and then bring the opportunities together, I think we begin the real change that's coming.
I should just mention that Wale was with the New York Pension Fund, yes? So you really know pension funds.
And we have to say thank God for that.
Yes, we do.
Thank you, Steve.
You know, Wally, I think that the pension funds, people really don't understand it, but wow, what power they have and how huge they are in Africa.
Absolutely. No, it's huge. I mean, if you think about the New York State Common Retirement Fund is about $200 billion. If they choose to invest 1% in Africa, that's $2 billion. That's significant for the continent, and it can make dramatic changes. It's interesting that the larger public funds are starting to move now, but we have to give a lot of credit to the U.S. endowments and their risk appetite. They want the funds to last to perpetuity so they can take risk, and they believe that they have the long-term perspective.
Well,
so,
we can help you with your risk appetite.
Absolutely. No.
I told you, we're having deals here right now.
That's why no sector on the continent is really a no-go and in no country. But because we have these kinds of investors that have this interesting risk appetite. But for us, it's still about risk-adjusted returns, though. So it's just not taking risk for the sake of risk. It's about making sure we can get the returns that will compensate us for the risk we're taking.
I think, something that investment titans like both yourselves could do is help talk with the leaders of the African pension funds and trying to address some of the regulatory concerns of investing in markets outside of where those pension funds are housed. I mean, we've seen some resistance from the investment committees of these pension funds to begin investing actually within the continent.
And now it is actually starting to come back. But the pick in South Africa, the pension there has encouraged a lot of other African pensions to do things with them. And I think I want to thank Wale because he brought New York in. Bringing New York in makes a huge difference for everybody else.
Everyone listened when you did that.
Yeah, and the Africans listened too. Yeah, so it's not just in the U.S., it's across Africa.
I think, Africans and a lot of governments are wising up to the Chinese investment strategy in the region, right? I mean, currently, we've seen a debt trap diplomacy of the Chinese and this loan-to-own model where they'll be providing loans and finances that are just completely unsustainable, and in a couple of years try to come in and take over the asset, and then along with it, take some commodities. And so I think, being conscious that there is an alternative to this Chinese investment strategy, we've committed $1 billion over the next 2 years to focus on growth in 3 particular sectors: the ICT space, value chains, and transport and logistics. And that's looking at the ports of entry to address some of the movement of goods issues that we discussed earlier. And the focus on these 3 sectors is understanding that, these are the sectors that could truly impact development in the region.
I think it's interesting to point out that most African countries actually have a bias toward the U.S., right? When I served on President's Advisory Council on doing business in Africa, and we did a trip to Lagos, Nigeria, we lined up U.S. businesses all the way from GE, from Walmart to Xerox. Pretty much all of the big accounting firms, PwC, KPMG, all U.S. firms. But the trick was trying to get a lot more U.S. firms or the bigger ones to understand that at some point, you're going to need a larger market than what you have now. You need to start thinking about investing in Africa. And the challenge for them was just getting that risk perception down. Because along with that risk perception being so high, they have a huge risk premium attached to it. And so part of the work we've been doing is really trying to encourage folks. So even you get a lot of credit because events like this that really talk about really the positive aspects of Africa help to bring down that risk perception and hopefully bring down that risk premium.
But investors don't really like events like this because, when there's the gap between perception and reality, that's when you make the most money.
Well, true. We should keep this quiet then.
Many in the audience are African diaspora, and so I've asked for questions to our guests.
My name is Kweku Amwako, and I'm the founder of Afropolitan Cities. We see the diaspora playing a huge role in Africa's development. There's a lot of potential in the diaspora: social capital, human capital, all of that. Where does the diaspora fit in your business model in terms of specifically as it pertains to the intra-Africa trade?
I think the diaspora can play a very, very active role on the continent in a number of ways. there have been examples of a bond issuance, a diaspora bond issuance that some countries are talking about. If that's possible, that's a beginning, which is capital coming back. I mean, I think the other part of it is obviously is talent. And that comes in two forms. Obviously, the ideal one will be for you guys to come back and join the folks like me that moved back from the diaspora and to contribute on the ground. Not everybody has to move back. I think it's very critical that folks in the diaspora, and I think young Africans, really take advantage of this really time in history. When I came to this country about 30, 40 years ago, talking about Africa was done in. The fact is Africa is in now makes you bilingual, meaning you have an edge in terms of understanding the nuances of the culture on the ground. And because then you have gotten some experience here, you have some know-how in terms of global best practices, combining local nuances and that local network that you have with global best practices is just the best that you can do to contribute back onto the continent.
Hello, my name is Dewa Mulisio. I'm from Botswana, and I'm a member of the Young African Professionals here in Washington, D.C. I have the inevitable youth African question. We have a vision of how you envision the African continent looking, how we can start either priming our minds, our networks, and our resources to be active participants in this future that you see, because we, of course, will be living in it.
When we talk about, catalyzing private sector dollars, which is what essentially OPEC does at its core. I always take a step back and think about remittances. What is it now? More than double in terms of all of our investment and foreign aid dollars going into the continent, right? And so I think if there are ways, it doesn't need to be the high dollar ticket prices of the $20 million, $50 million checks that Wale writes, but
Not quite.
But being able to pool kind of small funds from amongst friends or professional network and investing in African entrepreneurs.
And it is amazing how much money is being pulled.
Exactly. Looking at the VC fund space, right? I mean, where there is a real dearth, a real white space in terms of the African investment is between that, $50,000 to the $300,000.
The missing middle.
Yeah, exactly. And finding, those talented and driven entrepreneurs that are creating products and tools that will truly impact economic growth is a powerful story to tell.
My name is Helen Visaya, and I'm with F3 Global and serve on Diaspora Rise Up's board, as well as former director for Airchin Diaspora Network. The majority of the diaspora provides a lot of its funding back home through remittance money. And so part of that money actually goes towards developing small businesses, whether it's our uncles or our aunts or whoever else. Should the diaspora be investing in more infrastructure and offering small loans or different ways of collective debt?
So interestingly enough, the time is now. The opportunities for participating in large-scale bonds, for participating in traded equities, for participating in much smaller collective investment schemes has scaled up enormously. And the ingenuity and entrepreneurship of the young African investor is unbelievably exciting for an old guy. I was blessed to have arrived in Accra when Prince Charles and Camilla had arrived for a state visit. The state dinner celebrated young Ghanaians who were in all walks of life, from Oswald Boateng, I know he's a designer, to David Ajay, to musicians that are globally known, to investment bankers who are at the height of the investment banking community, all there together, capitalizing on their opportunities that happened in the Western world, but are coming back to Ghana and across the continent. I see it on many different levels today. The head of Vogue Europe was sitting there, was there introducing 8 different Ghanaian designers, and I'm speaking to 6 different guys at the Bank of America who control the European operation. They are not Americans, and it's really exciting to see the opportunities, not only as a specific investment, but that I see your compatriots taking in leading the global financial market, the global arts market, the global thought market back to Africa.
That brings us to the end of our program. Thank you so much to my guests, Wale Edeyuson, Steve Cashin, Orku Gashu. Thank you so much for being here with us. And thank you to the Nigerian Embassy for having us here today, and to all of our organization partners, and to our wonderful audience. To our viewers in Africa, America, and around the world, thank you so much for joining us. We'd love to hear from you. We want this program to create a respectful but robust debate on U.S.-Africa relations. Be sure to visit us online, friend us on Facebook, and follow us on Twitter to make sure your voice is heard. We hope you've enjoyed the program and that we'll continue to meet at the intersection of Africa and the United States.
Funding provided by the African Export-Import Bank, the Trade Finance Bank for Africa and host of the Intra-African Trade Fair, leveraging trade finance flows into Africa and mobilizing the continent's own energies to address development challenges. And by 4G Capital, Africa's fastest growing fintech, empowering micro and small businesses in Africa to grow and succeed through access to credit and financial information.